Welcome back. Hope you're having a good morning. It's Friday morning. Hopefully, the Friday evening is good. But for starters, Friday morning, you're going to be waking up to a bit of a downtick on the SGX Nifty. Let's see whether or not that gets bought into. But as promised, a lot of stocks to discuss. Amisha Vora, Chairman and Managing Director, and Prabhudas Lilladher joins us on the show. Hi, Amisha. Good morning. Well, a lot of stocks to track, Amisha, and we're at the fag end of result season. So let's talk about a couple of numbers. Z Enterprises, you all have coverage out there. Did you have a look at the numbers? And what's your view on the stock at around this 180 rupees?
So, of course, numbers are really pathetic. And we understand the growth in the subscriber or ad revenue markets are also slow and is slow for them. But the margins have also taken a big knock. Some of the recent initiatives have been really draining on the numbers. But as we know, that the big trigger for what everyone was watching this is if the Z Sony consolidates, combines, and then can be a major force to reckon with. I think last 2 years we've been waiting for that to happen. And still again, because of the latest NCLT question being raised, it is in a bit of a limbo. So as what we understand, if the merger goes through, then we feel at 12 times 25, we are still home for a 250 to 280 kind of a range in the stock. We also were thinking through what could be the downside if the merger is not going through. And in our view, it could be in the range of 140, 150. So if you see downside, upside or risk return, we have continued to keep it as a hold stroke buy. And our analyst still is of the view that the merger will go through.
Okay, that's on Z Entertainment. Amisha, hi, good morning and thanks for joining in. You know, we are at the end of the earnings season, so let me, leave this like a sort of a blank check question to you. What are the companies that you liked? Which are the companies where there is still more earnings and valuation upside now post this season?
So I'll tell you, last year, first and second quarter were completely impacted because of the rise in all kind of material costs, starting from energy, metals, chemicals, so on and so forth. We have started seeing some respite coming into all these commodity costs. So next 2 quarters, we'll start having that pressure from the gross margins going away. Also, we are entering the election year and a lot of spending by states should happen. So, but for El Nino, the weakest point in our economy has been rural spending. And if that gets aided by this election spending and overall buoyancy in the economy, then I think that all the consumer companies are good for next 6 to 12 months, because the prices have corrected, volumes have corrected, margins have corrected, and it has made a very good base. So as what you said, in nutshell, what I felt that the consumer space could be very good, both durable and somewhere non-durable. One of the examples, like Pidilite, as a combination of all the factors I explained, our analyst is expecting 37% CAGR in next 2 years. Of course, this is bluest of quality. But if you go down in the packing order, wherever you land, some of the stocks we are not covering, like Orient Electric, we still feel that the growth could be very good. So this entire space, which is consumer durables, you can say building materials, and to some extent this fast moving consumer also, is a space I think should be doing well.
Amisha, hi, good morning. Prashant here. Do you have coverage on Page Industries, Amisha? Because numbers have come in very disappointing numbers once again. And the stocks, moved up a little bit from about the 35,000 rupee levels, has come up to 40 plus. And these numbers don't do anything. They bring about a lot of earnings downgrades. I was looking at what Kotak is doing, what others are doing. Everyone is lowering earnings estimates aggressively, some 20-25% downgrades. Any thoughts at all?
No, sorry, we don't actively cover Page Industries, but I know that the numbers have been continuously under pressure, and of course, valuations continue to be extremely rich.
Okay, that's the problem, isn't it? Earnings growth is not what it used to be, and valuations are still high. And that should be perhaps one of the stocks to watch out for as we begin today's session, but of course on the downside. Now.